Good evening, Gaurav. Uh, we would like to understand from you the investment decision in the realty sector. Uh, Realty sector has so many variables which can go wrong or which are very difficult to forecast and predict. So, how complex and difficult is the investment decisions in a realty sector where you have to ensure that you get a project return, certain project return, but then so many variables which play out, we don't have a fuller understanding of those. So how complex is, we want to understand your perspective, how complex and difficult is it to make a decision, investment decision?
So over the years, what we've seen is regulations are getting more and more complex, and the need for someone to ascertain, especially with a sector-focused theme that we run in our funds, it's important to understand how the underlying asset is going to shape up eventually with the regulations and the impact of it in terms of are my project's economic viability going to get stretched, or is it going to be more beneficial to me? There is a complete web of complex regulations around. So it's becoming day by day more and more complex, and it's becoming a more, the need is getting a rise in terms of trying to get a professional to answer these questions for us, such that we are able to underwrite on that basis. Now, this is where Quantum's expertise comes and helps us in terms of first determining what is the underwriting assumptions are going to be based on. And thereafter, we start forecasting from there as to what could be the viability of these projects. So this is the basic root of the entire thesis that we put out as an investment case, and we start working on that basis.
So essentially try to reduce these variables and risks and get a better estimates using your internal teams as well as external consultants, be it technical, financial, or any other consultant. So is that the correct reading?
Well, we use a variety of technical expertise in terms of we'll use expert law firms, we'll use expert accountancy firms, we'll use experts from the taxation field, and similarly we use experts on the technical side, wherein companies like Quantum come and help us ascertain whether the assumptions that we're making are in line, and therefore the results are in line. It's a function of purely the assumptions whether our returns fall in line with those.
In terms of outlook for real estate investment in India, there has been very healthy inflow of investments over the last 2 years, especially 2 years. Do you have any idea what this will be in the next 1-2 years time frame? Will this remain a healthy investment flow, or will it surprise?
Over the last few years, we've seen large amount of capital which is being deployed in purely asset forms. So they are passive assets which most of these endowment funds are willing to invest in. Overall, if you see, the sector is still going through troubled times in terms of the lack of demand as far as residential real estate is concerned. Office sector has been doing well in terms of demand is being robust over there. We don't know what this new Trump regime is going to have an impact on further. But at this point in time, if you see, the base residential sector is going through really tough times, and it's anybody's guess as in when will we see sector recovery. But yeah, in terms of purely from sectors and developers' perspective, the financing needs, there are multiple forms of finances that are now available. So you have a focused real estate fund which invests in a development stage asset. You have mezzanine investments coming from NBFCs. You have traditional construction finance being available from banks. So the market has got a lot deeper over these last few years in comparison with the earlier cycles. So the recovery could be faster, but at this point in time, the base underlying demand doesn't seem to move up. So if that case doesn't present itself, financing can only do so much.
There is so much distress in the economy, and NPAs shooting up to more than 10 lakh crore, the figure that I hear so often. That distress is also in real estate sector. Maybe real estate sector is more disaffected than the other economy sectors. From an investment and fund perspective, do you think this is an area for focus and investment by your organization for acquiring assets? Do they merit consideration from investment perspective, the distressed assets?
We are not looking at stressed assets for investment at this point in time, but there are companies where we have seen a variety of ARCs which have now come in board in terms of trying to rescue these bad assets. However, real estate particularly doesn't nearly go into this sector because at the end of the day, this is an asset-backed form of financing that we do. So the underlying asset is still available, which is valuable. So most of the projects and investments that have been done are in urban centers, and therefore land being limited, it has a fair degree of value embedded in it. So the sector doesn't go as troubled as, say, compared to other sectors like, say, infrastructure, which is having a much higher degree of trouble, or say, power sector. But overall, the troubles are there, but it's still very much within the manageable regime.
Coming down to the engagement of Quantum for your projects, you have been using the services of Quantum for some period. And how these services have benefited you, we would like to hear it from you.
Well, it's been almost 12 years that I've been in doing real estate private equity and now, financing. We felt the need of a lender's independent engineer sort of service to be available when we started underwriting large ticket equity deals. And I'm quite happy that over the last 7 years that Quantum has been there. We've been completely associated with them in terms of whether using their expertise as far as determining feasibility or determining purely technical expertise in terms of ascertaining what kind of approvals are required, and if they pan out, how much areas could get generated through a particular plot, or even using their project management capabilities, which we've done over the last few years across a couple of projects. So I'm personally very satisfied with Quantum's ability, and especially the oversight that Mr. Pandit provides. So it's been a very happy journey, as I would say, and to a great extent. This is an area which requires a lot of trust to be there from a financing point of view with the service provider. And that's where I think Quantum's help comes in. So we've preferred dealing with Quantum's in places over others purely because of the relationship that we have and the trust that we place in this relationship. So there are a lot of discussions that I would have with Pandit sir, predominantly which are, just making me understand the transaction a little bit more, which I couldn't. So it's a lot of bit about reading between the lines. And I'm quite happy to know that it's reciprocated as well. So in terms of, my discussions in the past, it's not just merely restricted to what's on pen and paper, but it also goes beyond in giving me advice in terms of what are foreseeable risks that can come up, and if they come up, what are the kind of various mitigating actions that we can work with. So it's been a joyful ride.
Thanks. You mentioned about trust. So trust and integrity of the service provider. How essential are they when you select the service provider for providing kind of services that Quantum provides? Is this one of the very important items for you to consider?
Well, trust is a root cause where you engage a relationship with a service provider. And, there is a reason why you get a service provider to help you doing any due diligence. So whether it is the Price Waterhouse or KPMGs who come and help us with taxation and accountancy, here we rate Quantum at par in terms of helping us understand the technical subject. And like I said, it's a fairly evolving subject. So we've been able to ascertain what are our underlying assumptions with the help of abilities of Quantum, or even once the project is laid out and is work in progress stage, we've been able to at least manage and understand what's happening on ground. So quantum serves are like our eyes and ears both at the time of underwriting a transaction to evaluating the feasibility. At the same time, when the construction is ongoing in terms of what's going on over there, and they are through their reports we are able to cycle back information back to our committees and to our management.
Can you suggest some areas where you would like to see some improvements of services from Quantum, or some more value-added services that you can think of that Quantum should be providing in future? Off the top of the mind, does anything come to you at this stage, and you can share with us?
There is always scope for improvement in any service, and interestingly, last couple of years I've seen reporting formats undergo a sea change. So what used to be published as purely as a report has now become more, analysis, and there is a more graphic content in terms of how the report is laid out. So I would say that's one small improvement area in terms of reporting which Quantum can take, and otherwise we're quite happy with what we've achieved so far.
That brings me to my last question, is about the flow of institutional money, private equity institutional money. There is a huge amount of money going in the, what you said, rent yielding assets, the completed projects with full occupancy, so purely from the rent yielding income assets. And that is on full ownership transfer basis. Whether it's Brookfield or it is Blackstone, on several of them, GIC. GIC is not doing that. GIC is still having a partnership approach, that is DLF, but Blackstone and Brookfield are acquiring it on full ownership basis. That's not the case when the asset is under development, so active asset under development. Do you think at some stage we'll see the ownership for even these assets under development, or we'll never see, in your opinion, an acquisition bid by a fund investor for a project under development, under construction, or at land stage?
I think the two sets of investors have very different risk appetites. The investors which choose to invest in a passive form of investment in the form of rent-yielding assets, that's one set of investors who are averse to risk and they prefer having annuity-based cash flows, which are measurable, time-bound, as well as a particular return on their investment. So they are pretty clear as to what they want. However, the investors which appeal on the development stage, they have fairly high expectations out of their capital, and similarly is their risk appetite. I don't think personally these two meet, right? In terms of, it may be the same investor, but it will be a different pool of capital which will come from. Both of these investors are chasing a completely different yield curve. At the same time, they have very different risk appetites. But it's an interesting perspective, because we are going through a change as far as the cycle is concerned. We've seen a down cycle for last as much as 7 or 8 years now. And as cycles change, the opportunity that lies within the sector starts emerging, and as things starts clearing up, we will see some of these funds making a comeback in terms of trying to be more opportunistic in trying to add investments in equity form or in form of purely development stage assets. So it's what the opportunity presents itself. At this point in time, it doesn't present itself in terms of taking higher risk and chasing a higher return. But as things change and we see more demand coming back, I would assume most of these investors will be able to kind of also partake in returns on the equity story as well.